we were watching. So let me just welcome you to today's Daily Edge, traders, and we're going to start by looking at the my news terminal. And well, as you can see, well, if you had a look to the economic calendar today, you know already that today was going to be and is going to be a quite a slow um, quite a slow news or high impact event schedule on the economic calendar, but we do have the trade talks and the trade war between China and the United States. And I don't know if you knew this, but Huawei, the smart phone manufacturer, just got dealt a major blow by U.S. tech company. This is according to Bloomberg, right? Google, Intel, and Qualcomm and other U.S. tech companies froze the supply of critical software to Huawei. The move complies with Donald Trump's crackdown on China's largest technology company. Huawei will only be able to access the public version of Google's Android operating system, and it won't be able to offer Maps, Search, and Gmail. All right, so this is big news for that. Uh, yeah, for that company, and the trade talks between China and the USA keep just getting hotter and hotter, and Donald Trump just keeps tweeting about it. His latest tweets is, "We have a booming economy and working people are making gains that they haven't seen in decades." Of course, this is according to Fox and Friends. But again, we had the China in no rush to restart trade talks, which means that the trade talks are for the time being frozen, and the United States has increased its tariffs on the Chinese goods imported to the US. All right, so we are going to have a look at the US dollar. We're going to have a look at some equities, maybe the S&P 500 and the Dow. And we're going to have a look at oil because of this headline that just blinked, right? That Venezuela's crude oil production falls to lowest level since January 2003. All right, so let's start by having a look at the U.S. dollar and how it's reacting to this news on uh, the Chinese trade, the China U.S. yeah, and the U.S. trade talks. But let's have a look at some technical levels on the U.S. dollar. Right, this is the DXY, the U.S. dollar currency index, and well, if you follow me on this show, or if you're a premium member of our services, you already know that 9770 is and will always be the level for us, right? This is the level that the DXY was capped at the top for a few months before we actually broke right here. All right, and last week's price action, last Friday's price action was in fact extremely bullish. I'm going to thicken this out for you guys. All right, I think this is thick enough, and right here. Okay, that's perfect. So, this was extremely bullish, all right? Because if you remember, at the middle of last week, we saw this huge week testing the 97 and printing a very indecisive candle pointing rejection of the 9770 level. But then we got some buyers into the market and we broke above. Not only we broke above the 9770, but we broke above the this trend line that formed a triangle, which meant a continuation pattern on the US dollar. We closed above and we actually traded higher. Now, the level that I'm looking at, that we haven't quite gotten to it yet, is this previous high, right? Around the 98, the 98 and 98.10 level, which is also the 161.8% retracement from the last leg down, from this high to this low. All right, critical level because the previous high, a previous base, and a target for longs. Okay, a bullish target from mid to long term longs. All right. So we haven't quite gotten there yet. And right now we are seeing some bearish pressure in the US dollar or the XY. Right. And yeah, I mean, we are still making higher lows and higher highs, and we might be testing this zone right here. Let me just point it out. I'm going to use a array to point it out. The previous high right here around the 97.87 level, or well, the 87 to 97.90, which is the previous high that was made by the DXY. We might be just reversing or retracing to this level for a continuation and a test of the actual uh, resistance zone that I have pointed out at the top by the orange dotted ray at around the 98.10 level. Again, if you have any questions, just uh, type them on the chat and I will be more than happy to respond. All right. So today's Daily Edge is going to be a quite short one because, well, there's really nothing too much going on in the currency markets, but we are going to have a look at crude oil and we are going to have a look at gold. All right. So this is the US dollar. Remember that we are still in a bullish move. We are still very much bullish above 97.70. And the immediate price action to the downside really doesn't change our bias. Okay. The 97.70 level is going to be, or is actually, our bear bull border or a bear bull level. Above it, we are still bullish on the US dollar, and below it, we are bearish on a technical basis, right? Again, there's nothing much going on today on the United States, or actually, yeah, we have a Chair Powell uh, um, doing a press conference later, and we'll see what he has to say. And of course, the market is going to react to it. We're not going to be live for that, but we will definitely have a look at what he said and the market's reaction, the dollar's reaction on tomorrow's Daily Edge. All right. So why don't we have a look at crude oil? Let's have a look at WTI. Uh, and we are going to look at WTI. All right. So yeah, I mean, this is the 4 hour chart. Not too. I mean, I was expecting a much uh, stronger bullish reaction to that Venezuela um, crude oil production news, right? Remember that when the production decreases, right, I mean, this is the basic rule when if you're trading crude oil, when production decreases, the well, the price of the commodity, in this case crude oil, is going to increase because the offer is lower of the product, right, or the commodity. And Venezuela being one of the biggest oil producers, and its oil production falling to a 15-year, 16-year low is big news. And that's the reason I was expecting a much stronger reaction on the bull side. But let's take a look. I mean, you already know that I really don't look at the 50-minute chart or anything below the hourly. But let's have a look at the 50-minute chart on crude oil just to see the reaction on the news. As you can see, well, crude oil was trading down. It retraced back to these levels, and it started to trade down. And if you have a look, I'm just going to grab a rectangle because I want to point out, uh, well, the candle that I'm looking at. Actually, here's the rectangle. All right. So this is the candle that I'm looking at, right? This big bullish candle with a huge wick to the downside. This is where the when the news hit the wire about the Venezuela oil output, and as you can see, there was a big bullish reaction. And price, let me just grab my cross hair tool. Uh, price went from the 60 to 73 level to close at the 62.99. So that's a big move. Uh, uh, in crude oil, given the immediate past price action. I mean, you can see that this candle covers completely this move to the upside. So yeah, there was a big bullish reaction on crude oil given the well when the news of Venezuela's output hit the wire. So let's go back to the 4 hour chart and let's have a look at some levels because well if you follow me or if you are a or if you follow this show, last Friday we were talking about actually this level of support that I told you that Matthias K pointed out on the premium community for a nice long position. I mean, he nailed this the 61 level. Um, Around the 61 level, he nailed this long. All right. But right now, the price of crude oil is being capped by this area of resistance, these previous highs. All right. We didn't quite get there, and well, you can see. Let me just grab another one of these raise. This is the actual area of resistance that I'm talking about. We didn't quite reach. Leads me to believe that this is another small retracement before we make a higher high and really hit this area of resistance where we are going to be finding sellers. Just take a look at this candle right here. Remember that candles do give you information. All right. And we are just using candles right here. We are not going to be using uh, volume analysis for this particular daily edge. And well, you can see that this is a great or a big bearish rejection candle, right? And that this gives you the information that you need to confirm that this is a zone of resistance where sellers are going to be placed. Why? Because when we broke to the downside, we retested this zone. Buyers tried to break above it, but sellers took control of the market and rejected. Well, buyers weren't able to sweep all those sell orders, and price went all the way down here. All right, where buyers are standing, right, where buyers are protecting this level. As you can see, sellers tried over and over and over to break below. They were unable, and now buyers are in control of the market, and we haven't quite gotten to that point or to that exact point in the market where sellers are placed at. So in my opinion, a short position at current levels will be premature because this level is going to act as a magnet, and it's very possible that we are going to be uh, testing it. Okay, so if you should you go short at these levels and put a stop loss above the previous high, it's very likely that you're going to be stopped out when price moves up to retest these levels. And of course, given the news that just hit the wires about Venezuela's output production, definitely. Well, not definitely because no one knows for sure what's going to happen. But I mean, given the fact that we haven't hit this area of resistance, right, and given the fact of that oil production in Venezuela just crashed to 15 years or 16-year lows, everything points out that we are going to be testing these highs, where we are going to be moving higher. Let's go to the hourly chart and let's see. Let's have a closer look at what's going on right here. And as you can see, right now, this is very bullish, in my opinion. Okay, price action right now is very bullish, but again, um, it would be, I mean, it would be out of my rules to take a long position unless we break with this previous high. Again, this is not a position that I will be taking. I mean, to have all transparency, but because I don't trade. I mean, I don't trade on the short term, and this is basically a scalp or a day trade. But if you're into it, I mean, and if that is what you do, those are the levels that I'm looking at for a bull run and a test of this area of resistance, a break above this week or this previous or this immediate high. Okay, that would justify, or that would I mean, uh, uh, that would give me the extra boom to for that, for this long trade idea. All right, but for the time being, I'm just going to be a spectator on this market, and but I will definitely be looking at reaction to that magenta area of resistance that I pointed out on the 4-hour chart, guys. So yeah, basically, I am a spectator in crude oil right now. Great news for an immediate bull run about that Venezuela output production, and I will be looking for a sell opportunity around these levels if we hit those levels, right? So that's crude oil, guys. Now let's go and let's take a look at what gold is doing. So last week, we were talking about. Let me point out the zone that I'm about to talk about. It's this great box right here, and I'm going to. I mean, if you already have a look, had a look at what, well, at the entire price action, I'm going to talk about the setup, and then I'm going to zoom in on it. So basically, we broke with this very structure and this level of resistance to be tested again, and then we dropped to retest this level, the red level or the dotted red level of previous support, previous resistance at around the 1285, 1234.65. 1284, 60, 1284.70 level, and of course a retest of this broken trend line. Now I'm going to zoom in. So I'm going to this is the area that I'm going to be talking about, guys. But now I'm going to delete this uh, gray square. All right. So basically, yeah, I mean, we had a big move to the downside, rejection, then indecision, and then a bullish move to the upside. This is where it looked good, a continuation trade to the upside, and retest of this previous area of volume. This is a big area of high volume, previous level of resistance being tested, and of course the broken trend line being tested, and a very bearish move followed by indecision, and then a sudden bullish move. Everything pointed out or for a nice reversal trade of a retest of a broken level. All right, everything pointed out very nicely, and what happened is that you can see it on my chart. Gold broke to the downside. All right, and broke gold. And I'm sorry, gold broke to the downside because well, it was Friday, right? And we had a very big bullish move on the U.S. dollar. The US dollar and gold are inversely correlated, not 100%, but there is a strong inverse correlation between the two. And the US dollar rallied and gold crashed. Okay, so now what I'm looking at in gold, let me just zoom out, is that well, right now it's trading in no man's land. It's in the middle of my levels, and what I'm looking, or what I will be looking at, is a retest of this gray zone. at the bottom, which is my buy zone, which is a previous point of control, uh, and the previous area of high volume. And it is where buyers have been placed in the past. So I'm going to wait for a retest of these levels around the 1269.50 levels, 1267.60 level, and I'm going to wait for a reaction. All right, and when we get that reaction, we are going. I'm going to decide if the setup is complete for a long position or a short position if we break and retest. Okay. Now, if you are not uh, well, if you're not a premium member, I'm going to leave you on the chat at a 1 month trial of our premium services where you can get all this information the moment that the moment that I analyze my charts, I share it on my on the premium service or the premium community, and of course the signals of my trades are sent also there. Right now, I'm just telling you the areas that I'm looking at, but if you want the actual setup when we test that zone, grab a 1 month trial. So basically, this is what I'm looking at when I'm looking at gold right now. All right. Uh, right now, it's trading in no man's land, as I told you before, and what might happen is that we might rally if the price, or I mean, if the US dollar continues to fall in today's session, gold might rally again to this previous area of support, resistance, then support, and then continue the bearish move to retest that buy zone that I have set out with the gray rectangle. So if this happens, we are definitely going to be taking a short position. Uh, a short position for that retest. Then we are going to put our targets at this zone, which will be which will make for a great risk to reward scenario if that happens. Because the other scenario is that gold just continues to flush and hits this level or my buy zone and then rallies back to test this previous area or this previous high volume zone around the 1284. And of course, there's the third scenario that gold might retest this level, which I'm not going to draw, but you know the third scenario that gold might retest this buy zone, but break below it. In any case, I'm going to be watching those levels and I'm going to be making a decision once we hit these levels. All right, so let's take a look at the pound versus the US dollar. Now, well, actually, I wanted to show you a longer term chart in gold. All right, and this is something that sometimes people don't uh, don't look at. This is a longer term chart in gold, and as you can see right here, all right, this is a longer trend line starting in August 2018. We are testing. We already tested this trend line again, and we are testing it right now. This is the daily chart. Let me thicken this out for you guys, and let me just clear these lines that I just drew on my chart. All right, so we are retesting this trend line again. Okay, but the thing is that if you look at the daily chart, we are making lower highs, right? This is a lower high, this is a lower high, this is a lower high, and this, even though we broke with this trend line, this is a lower high. All right, and I mean we are making also lower lows. I'm not going to point them out, but right now, I mean the retest of this trend line comes after making a lower high and comes very quickly. given historic price action, which leads me to believe that a fail or a break of this trend line might happen. Again, this is just a possible scenario that we are looking at as we speak, or yeah, or that I have in my watch list. This is just a possible scenario, and uh, a justification of a short trade should we break with this trend line and this previous level of support. All right, I just wanted to point that out. Well, let's go back to the forward chart and let's just zoom in again. So that's my analysis on gold, and let's move to the U.S. dollar. I'm sorry, to the pound dollar. All right. So last week we were talking about that break above below the 2880 level that I have pointed out with this green rectangle. And well, not only that, I'm going to show you something right now. We are moving in this bearish structure, all right? And here, this is the structure that we're moving in, all right? And let me just delete these lines that I drew on last Friday's daily edge. So right here, guys, right here is where it looked like a very nice buy on the on the pound versus the US dollar. Now that level, the 27.95 level or the 28 level, I'm going to zoom in and I'm going to show you on historic price action. All right, this is a level where buyers were found after a after a big bearish market of around 400 pips. All right, buyers were found at this level, and price rallied, making higher highs for around 556 pips. So big level right here. Not only that, but you can see here that this level, we had a big rejection of this level right here. And again, buyers were found for a rally. So when we hit this level again, not only were we hitting that level, but we were hitting the bottom of this bearish structure, and that looked very juicy in a technical way for a buy and a retest of these of the previous lows of or a retest of that previous broken level, or that previous um yeah, the green level that I pointed out last Friday. So it looked very juicy, right? But again, let me just going to zoom in a lot because this is important. All right, maybe not that much. Yeah, that's much better. So I'm going to delete the gray rectangle and that line that I just drew. And the reason I want to point this out is because of the way that I trade, or the way that I take trades. I mean, even though it looked very juicy and the risk to reward was also juicy, and the technical analysis, previous levels, we can even draw some Fibonacci levels, and they confluence with the 128 perfectly. I didn't take a buy at market. All right, I needed, in order for this to be a real reversal, I needed this high to break. Oops, right here. All right, let me unpixel this line for you. Right. So I needed this previous high to break. And why is it that I needed this previous high to break? Is because, yeah, well, the technical analysis was there, all right? But technical analysis is nothing without justification of price action. And for a reversal to be taken into consideration, we needed, after this bearish move, indecision, and then a bullish move that broke with this previous high. Okay, a break with this previous high means that we are making higher highs at a big level of support, the bottom of the bearish structure, etc. And that, I mean, if that happened, that gave my setup a higher probability of hitting hitting my targets. Okay, so we did place some buy stops above this level, but then price broke to the downside, and of course we deleted those orders, and we didn't get burned like a lot of traders did because of their recklessness of just buying at market because of the setup that I just pointed out. All right. So this is the pound versus the US dollar. Well, I mean, there's nothing too much going on right now. Uh, and the level that I'm looking at is again the 127.95, 128 level, maybe for a retest and an opportunity to short the pound versus the dollar again for a test of the 126. I mean, this bearish move from these highs from the 131.20 is massive. Well, we have dropped from high to bottom around 400 pips. Uh, and this is without even a mention of a Brexit. You know, this is without the mention of Brexit. So this bearish structure is no longer valid. All right, and now we're just working with levels. And the level that I'm looking at again is the 127.95 to 128 for a retest and a continuation to the lows or this level, or the level or the big level here at the 126. All right. So this is well, this is what we're looking at today, and if there is no if there is no questions, uh, I thank you for joining me on today's Edge. I'm sorry, Daily Edge, and I will be back tomorrow as scheduled. Uh, and I will be notifying you via social media, via our premium community, or via email. Again, thank you for joining me, and goodbye.